Good afternoon, everybody. Welcome to the recap. I'm Laz, filling in for Scott on this Friday afternoon. I hope everybody had a nice week. Let's pop right into it. Let's do a little random walk around Wall Street. We're going to look at some indexes. We're going to look at some symbols. We're just going to kind of, get a broad stroke of what's happening here, what we can maybe anticipate for next week, what price is telling us about, the possibility of continuing this rally or potentially putting a halt into this rally and maybe some contraction or even a pullback. So let's hop right into it here. We're going to look at the S&Ps to start. The S&P 500 index uptrend still intact. We saw some selling earlier in the week. Monday, Tuesday, saw a big gap down. Wednesday, Thursday, Friday, grinding right back up. It's kind of been the predominant theme here. We really haven't seen too many pullbacks. Ever since this low was put in back in mid-December, we had this minor pullback for a day or so. We had this minor pullback for 2 days or so, and then lastly we saw this pullback. But again, very very quick, and the slow bleeding uptrend continues. We do have to take note of some reference points into next week. We obviously have prior highs, which we didn't quite get through today. And we have to, possibly evaluate this, uptrend that we've been in. Again, I'm annotating the chart as we go here. You can see the uptrend, snapping back. What happens next week? Kind of a crapshoot at this point. Obviously, we favor the trend. The trend says up, but it wouldn't surprise me to see some larger, I guess consolidation, maybe another pullback followed by some back and forth trading, possibly even building some sort of symmetrical triangle. Again, these are just possibilities or scenarios that we need to always think about as trading. We're always trying to anticipate future price movement as active traders, so we need to be prepared for what the possibilities are here. Another possibility would be some, a day or two or three of some sideways consolidation in this upper range, and then possibly new highs again. So be prepared next week. I think we'll evaluate into Monday and into Tuesday. We'll have a better idea of what this market wants to do. But for right now, again, it is a little bit of a back and forth type of trade. If we go down, let me take these lines off. And we time down to a smaller time frame. Let's take a look at our hourly. Again, this is the SPX. If we look at the spiders as the ETF, we can see this rally started with a gap here and continued with a gap here. So there's some unfilled gaps that have pushed us up. Towards the end of the day today, we saw a little bit of a drawdown. Again, smaller time frames. You can see we basically, for the better part of the afternoon, the S&Ps, rallied up, flirted with basing all day. I think a lot of traders were anticipating possibly new highs. And at the end of the day, we saw a little bit of a drawdown. So, what does this mean for Monday? Well, it's too early to say. I think Monday, if we stay within this range, you could see the possibility of a larger pullback developing. Let's take a look at the last 3 days. If we throw our retracements up here, again, we got to look at where we came from, lows to highs. The possibility exists we could pull back 38 or 50% before maybe, starting back up again. So at this point, it was a nice recovery to what was a pretty vicious sell-off, really most of it coming from a pretty large gap down Tuesday. But that gap down immediately gapped back up, gap back up. So we saw a gap down, a gap down, a gap up, a gap up. A lot of volatility there. So tough to trade, especially if you're a trend trader. Definitely a little bit more of a difficult tape right now. Not quite seeing the follow through that we saw just a few weeks ago. A little bit more chaotic in that regard. Let's take a look at some of our leaders. Let's go back to the charts here. We're going to start obviously with the perennial leader, Apple. Again, Apple sort of looking like the market a little bit. You saw that nice drawdown again, but grinding right back to highs. Didn't take out prior highs. We had that flat top high around 547, 548 from earlier in the week, which sold off pretty aggressively. Saw a nice $20 so drawdown. The iPad 3 announcement came out 2 days ago. Really not much of an effect here. We didn't see, you know, a whole lot of movement. It did, you know, trade higher after the announcement, but not making new highs. Let's take, you know, let's keep an eye on this level going into next week. Is definitely proving to be somewhat of a formidable short-term resistance area, as we've seen a couple of touches into that arena. We look at like a 30-minute chart, you'll see it a little bit more clearly. Again, these are the highs. You know, the 546 to 548 area, we've seen 1, 2, 3, and 4. You know, 4 times today. We rallied up early into that, but sold off. You know, trading back down to the lower 540s towards the end of the day. So keep an eye on Apple. As you know, if we can clearly get through that upper 540, 547, 548 area with some volume and some thrust, you know, the door's wide open for potentially, you know, new highs to, I would say, to 560 and potentially higher. So we'll keep an eye on that one next week. IBM, another leadership stock here, you know, pulling back for a day, but right back to those prior highs. Definitely want to watch that as well. Some other stocks that I think you want to look at for leadership. Some of the cloud symbols, CRM, showing great strength. Nice patterns here, breaking out above prior highs, looking to me like they want to go higher. Wasn't too long ago that these stocks were, you know, sitting at 100. Now they're trading 150, or this particular stock. So a lot of volatility in this tape. You know, you're seeing some aggressive sell-offs, and it looks like the market looked at that as a bargain, and now, you know, a little extended, obviously up here. Prior highs, you know, we saw that prior high, that double top back from July, August, where this down move started, up to 160. So, you know, being a buyer here, you're definitely going to incur a lot more risk. But right now, from what we can see, there's still a lot of strength there. I would throw VMW into that as well, as those stocks look very, very good. These are stocks that, you know, I know Scott talks about on the morning call all the time. The credit card stocks, Visa, MasterCard, both, you know, sitting at new highs. Priceline, again, some high beta, you know, a little bit of a down day today, but for the most part, just buyers galore everywhere in this stock, as well as Sears. I know a lot of people have been watching this stock. You know, January 1st, the stock was $30. Let's fast forward 60 days, and the stock is $80. So very, very interesting chart here. And again, today, even as the market sold off towards the very end of the day, the stock, you know, pushed towards its highs. So we do have to respect this prior pivot high up here, just a stone's throw above. These are our highs back from you know, October of 2011. Probably going to be some resistance up in here. I know a lot of traders will probably look for a pullback from that level. So a trade to watch into next week, as we'll probably be there Monday or early Tuesday. So, you know, a little extended here to the long side. Definitely some rest and some consolidation. Wouldn't be unexpected or even unhealthy. Stocks generally won't trade one direction forever. I do want to highlight one other index. It's the Wilshire 5000. I know a lot of time is spent evaluating S&Ps and even the Dow, as those are sort of the benchmark indexes, if you will, and even the NASDAQ 100. But I think it's important to look at the Wilshire 5000 because it really is the broadest array of stocks. And again, like all the other indexes, it's been in a nice tight uptrend. You're not going to see a whole lot of difference here, but I do want to keep an eye on this uptrend here in the Wilshire. The uptrend again from these October lows, you know, has held here. You know, we saw a pullback here again here a couple days ago. You know, no real reason to get excited or there's not really a trade setting up here. But I want everybody to just keep an eye on this uptrend, as it could spell, you know, if it does get breached, that could be a signal for us that something is potentially changing here overall. So keep an eye on the Wilshire in the days and weeks ahead. Is it to me a little long in the tooth here, and we could see another downdraft. Take a look at the weekly. If you look at the weekly chart here, the last couple of weeks, although we've had this nice rally, the last 3 or 4 trading weeks, you know, we haven't seen the open and the close really differentiate itself. We're opening and closing at least 3 weeks in a row with these doji bars. So we're open. So you know, this rally is getting a little long in the tooth, and you can see that momentum sort of waning up here. Is this a consolidation for another, you know, thrust higher? I think time needs to be seen, but we're definitely in an area where there's prior resistance. When we look to the left, you know, you have all these peak highs up here. You know, this trend is not anything new. So a pullback to me wouldn't be totally out of the cards. And you can see just from our candlesticks, what the language of price is telling us at this level is that this rally's tired. It's not a new rally. It's not fresh. Again, the longer it sits up here, a couple more weeks, it'll just re-energize itself for potentially another thrust. But we have to be cognizant of the fact that we're at a level of resistance. The market is a little long in the tooth here. You're not seeing the momentum intraday that you once saw, and stocks are beginning to fail a little bit more frequently. Case in point, we take a look at Goldman. Here's a daily chart of Goldman. A lot of buyers were here. A lot of eyeballs were at this level. When it really got through that 119 level, you can see that was like early or later last week. We saw that big thrust up. That thrust up, sold off and failed. That breakout failed, and now it's snapping back a little bit. But this to me is something we want to keep an eye on, because if banks don't really start to leg back up or participate, you could see the market start to break a little bit on that uptrend. So we're going to keep an eye on some of those banks for clues in the days ahead. The banks have been performing nicely for the last few weeks. Some banks are still performing nicely. JP Morgan had a nice day, continuing higher. I even think Wells Fargo, again, looking good back to highs. So, it's sort of a mixed bag in that regard, but we'll keep an eye on some of the broader indexes, the Wilshire, even Bank of America. I think if Bank of America can thrust out of this base, you might see the market continue higher. So a couple of key symbols here, not necessarily great trading symbols, but indicators that I think we can watch going forward. So between some of the high beta leadership, the Apple, the IBM, as well as some of the banks, it is a market of stocks right now. It is a stock picker's tape. It has been for quite some time, in my opinion. You have the cloud symbols, the CRMs and the VMWs, the credit cards, some of the high beta tech stocks that we talked about, and even some of the banks that are a little slower, more methodical. Some retail participating, Lulu back to highs. Under Armour actually looks pretty good. Just rifling through some symbols. That pullback a couple days ago got bought. So there's you gotta be flexible. You gotta figure out where you want to be and try and look for pullback opportunities, because pullbacks seem to be getting bought pretty consistently in a lot of these names. As always, and I said it for a long time, plan trader is a profitable trader. Tune into the morning call on Monday and have a great weekend, everybody.